Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Let's get another check now on how the fourth quarter earnings season is shaping up with our research director, Shiraz Mian, who's going to kind of put it all in a nutshell for us here. Bad as it may be, we're going to go through it step by step another time, you and I. Let's recap the scorecard first.
Sure. I have a couple of slides to share with folks here. So as of this morning, we have 388 S&P 500 companies have reported results.
And this morning, February 16th.
February 16th, exactly. That's about 85% of the index's market cap. Total earnings for these 388 companies are down 6.4% on 4.6% lower revenues. 67.6% are beating EPS, 47.8% are beating revenue. When you exclude energy, which has been a big drag in recent quarters and is a big drag in this too, then the growth becomes effectively flat, just down 0.1% for the S&P 500 as a whole. This is the total, the summary scorecard for these guys, and the bottom row shows it on an ex-finance and ex-energy basis. So overall, a pretty weak growth picture.
What about the strong dollar? Still a drag?
It sure is. It's the strong dollar. It's these growth worries about the state of the global economy, and then energy and issues in the broader commodity economically sensitive areas. So it's not just oil. Pretty much every commodity sector and pretty much every economically sensitive sector is suffering.
What's the situation with companies beating the EPS estimates or meeting them?
Sure. So I have a slide that compares the results thus far in Q4 with what we had seen from that same group of companies in other recent periods. The left-hand side of this chart compares the growth picture for those companies, and the right-hand side picture is the comparison of the beat ratio. So you could see that on the earnings front, the EPS beat ratio of 67.6% is a shade below what we saw from this group of companies in the previous quarter, meaning 2015 Q3, and the four-quarter average, the 4 quarters running through 2015 Q3. A little different on the revenue side. Revenues surprises are tracking a shade better than what we saw from these companies in the previous quarter, but still modestly below historical levels. So you don't really see much of a trend there. It's a shade on the weaker side, but not in a big way.
And revenues, just to clarify, reflect sales?
Yes, revenues are sales. That's right.
Okay. What about any positive standouts at the sector level?
Oh, you really have to look deep. You really have to look deep. There's the growth we have been talking about. There's not much growth. So in here, we're looking at Q4 as a whole, meaning the 388 that have reported results and the 100 or so that are still to come. And total earnings will be down 6.7% on 4.3% decline in revenues. On an ex-energy basis, it'll be down minus 0.3% on 0.2%. So overall, a fairly grim growth picture. If you're looking for positives, I would say medical, the fourth row from the top. We have a 9.3% earnings growth and 9.4% revenue growth, very strong. The surprises picture, folks can go back to that scorecard table and see that the ratio of positive surprises have been very strong as well. Autos is another one, and that's in line with what we've been hearing about, the record auto sales and stuff. So autos is also doing good. Transportation is pretty strong in terms of the growth rate. We've been talking about how airlines have been doing a lot better and offsetting the weakness that we have in railroads and truckers. Technology, one of the bigger ones, in fact, on the surprises side, has done fairly well, though growth is anemic there.
But we still have retailers to report yet.
Retailer, yes.
So might that be a bright spot, or?
In the aggregate for the retail sector as a whole, it may not really stand out within the S&P 500 as a whole, but I think it's reasonable to expect for the retail to do better. In the same way as transports are doing better because of the low oil prices, retail should do better. But we have to be mindful that retail has so many of these moving pieces. So these department stores and the big box, these guys are dealing with secular issues, the Amazon effect and the online effect.
And weather's been a big factor in parts of the country.
Weather's problematic. There's the digital migration. And all of that is a problem for the traditional guys, but the online guys should do a lot better. We should see better results from the catalog guys. Restaurants are doing a lot better. So overall, it should be a relative to what we are hearing for the S&P 500 as a whole, relatively better earnings picture from retail.
All right, what about Q1? Let's look ahead if we can a little bit. Any more optimism there?
Do you know, there's none. In fact, the growth picture for Q1 is looking as bad in terms of the revisions trend as we have been seeing in the recent past. So right now, total earnings for the index are expected to be down 7.9% from the same period last year. In fact, the magnitude of negative revisions that we are seeing for Q1 trumps everything that we have seen in the recent past. And this is in the aggregate, even on an ex-energy basis, it's coming down. So it's not just energy and basic materials and the commodity sectors. The trend has been on the negative side for finance, for technology, for a whole bunch of others too. And it's not just Q1 16. The picture isn't that pretty beyond Q1 either. So this slide shows the highlighted 4Q15, which is currently going on, 6.7% decline, 7.9% in Q1, and then 2.7% in Q2. So practically all the growth that was expected in the first half of this year has evaporated, and a lot of hopes are riding on the back half of the year. You will recall that it's always greener towards the end of the year. That's right.
Yeah. Well, I don't know whether to say thanks or not for all of that information, but we do appreciate you checking in with us. And in the meantime, with whatever time is left in this Q4 season, you can always check the written commentaries on earnings trends that Shiraz pens on Zacks.com, and his daily comments in his Ahead of Wall Street column on earnings as well. With Shiraz, I'm Terry Ruffalo.